Hey everyone, this is Drippy, and this video I'm gonna talk about small account growth strategy. You can call it SAGs, and we're gonna talk about this overview of this strategy, things to look out for, some of the technical analysis, and the setups we'll look at, the rules for this, and how to manage the trades. So in this video, I'll give you a compact view of what's to come for next 2 weeks on the Discord. So folks who are on the Discord, I will be making a separate video for each of these topics every day, and I'm gonna upload it, and then also we'll use them on the live trading. I'll share my screen, and then we'll use that to propel our knowledge and then our account as well. So please watch this video very carefully, and also focus on every single thing I'm mentioning, because I've condensed roughly like 3 or 4 years of my knowledge into this like 30-minute video. So pay attention to this, watch it on a monitor if you have it, and just cut all the noise and watch it. Okay, so first question you might have is, well, why only trading SPX, SPY, IWMQ, QQ options? Because it's written here. The answer is simple, because we have some things for a small account we need to keep in mind. For example, the liquidity of the chain, the spread, how cheapness is something very important, and expiration Monday, Wednesday, Friday. These indexes provide you SPY and QQQ and IWM. They expire Monday, Wednesday, Friday. So 0 DTEs are cheap, and next day expiration is also cheaper. 0 DTEs are cheaper, and next day expirations are cheap, but they're much cheaper than some of the stocks like Tesla, and people can't afford them. So just to give you a quick example here, this is the SPY 426 closed on Friday. So this we're looking at Monday's expiration, which is tomorrow in this case, which is April 25th. And first thing you'll notice here is that look at this option pricing here. So this is ask, this is bid, and so we have ask of $2 for this for next strike out of money, and bid is 1.99, super tight spread, almost 1 cent spread, right? So that's really great, because let's say you get stopped out because of a level and you're keeping a trail based stop loss. You don't have to worry about the bad spread, because the spread is amazing in this, and you don't have to worry about lower bids, much lower bids than ask. And also look at the volume here, 18,000, 26,000, and this is even before the day has come. On the day we'll have more volume here, 51,000 contracts here for calls, and then similarly for puts here. So very high volume, so you can get in and out very easily, highly liquid chain. And strike is also 47, 48, 428, 429, 426, 425. So 1 point increment and decrement in strikes, which is awesome, because not a lot of stocks have that. So all these factors combining with the fact that you don't have to pay attention to other names in the watch list, especially when you're a beginner, you're understanding the concepts of technical analysis, and you're starting out with trading options, and your focus should be to make money fast, in and out. Scalping is probably the most easiest, in my opinion, to start with options using this strategy. And swing trading and all those things, we'll talk about them later. We'll have a separate workshop for that. So this is why we're going to trade them. And so one final point I want to make is that SPY and SPX, a lot of people have questions like, well, why are you trading SPX, Drippy? So notice I only trade SPX during the last 15 minutes on 0 DTEs. And the reason is that SPX contracts, they are 10 times SPY contracts, and SPX contracts roughly move 10 times, So risk reward is really good. If I can get a SPX contract, for example, 4360, 4460, let's say I want to get, so SPY SPX is 10 times this, so SPX probably closed around 42.60, right? And we can check here, right? So around 42.70. So it's roughly 10 times. So the premiums are also roughly 10 times. So they move 10 times too. So zero DTs are super explosives on SPX. And on a normal trading day, I personally don't trade SPX because the premiums are expensive. You know, they'll be 10 times this, so $20 roughly. So so that means $2,000. 20 is the on the chain. So $2. This is $200 for the 427 call for SPX, Aspire in this case, and SPX would be roughly around 2,000 or more. So that's why we only trade them zero DTEs. So that's pretty much the only reason why I'm trading SPX on zero DTEs. And you don't have to. You can trade SPY as well. The concept is similar. You just have to think about what strikes to choose and stuff like that, which I'll cover in a minute. So before I go forward with this strategy, some rules we need to think about, and this is coming from just like losing in the past and what has worked for me. You can create your own rules. So for example, risk reward, which I will talk about in this video, does not necessarily mean that you have to follow the same. You can increase, decrease based on your preference. So that's what, while you're learning and practicing, realize that what works for you. Does tight stop help you, or does wider stop help you? Taking profits early help you, or taking profits later help you? So you need to identify that yourself after doing 100 trades. And so the basic ones which I think everyone should follow is, if you're using this strategy, right, and you're working on a separate account, ideally I would say have a separate account for this strategy so you can track it over time, and only take 1 to 2 trades a day, nothing more than that, because it gets overwhelming. And look for really good setups, which I'll talk about what are good setups. And 1 to 2 trades a day, nothing more. Sometimes you'll see that there's a lot of opportunity, so you can take 3 or 4, but try to stick to 1 to 2. Anything more than that, you tend to give back to the market. And once you are done with that, right, instead of looking at the charts again, what you can do is use that time to log your trades and journal them to see, okay, I use this strategy, I use this setup, and it works for me. And that way, over time, you can see that which ones are your winning ones and which ones are not working for you. So only trade the ones which are working for you. So journaling and logging will help you with that. And fourth is no setup, no trade. If you don't see any of the setups which I talk about in this video, you don't have to trade it. Now, me, I have more setups in the belt than this one, so I might trade them with you guys on the live trading, but that doesn't mean you have to take it. Learn from it, identify the setups which I'm looking at, and then take examples, and then proceed with caution. You don't have to copy every trade I take. So no setup, no trade, and no YOLO. This is not the strategy which is like you work $1,000 to $2,000, $2,000 to $5,000, and then you put whole account in it. In my experience, it only works for very few people in the market, and it doesn't work for 97% of the people. So chances are it won't work for you. So, and it only works for people who don't need money, in my opinion, because they're willing to lose all that, and they treat that all money as lotto. And people who need money won't be able to be successful if they YOLO all accounts. So no YOLO. And take profits, stick to the levels, and cut losses. So those are the basic rules. Everyone should be aware of them. I have a risk management video. You can watch that on my YouTube channel for more in-depth research on this topic. Moving on now, first thing I want to talk about is basics of trade management in this case. So hey Drippy, can you show an example like why this strategy is going to work? And that's the point I'm going to make right now. How does your equity curve look like in this strategy? And can we run this strategy theoretically, can we run this strategy on an online simulator? The answer is yes, we can, and that's what I'm going to show you right now. You can go to this website winrate.io, It was made by a fellow YouTuber, and this was meant for crypto trading, but I can use it for options, So, starting balance of $500. In this case, I have put win rate as 70%, and I'm going to talk about how to increase that, but you can keep it 60 as well, and I'll show you the results with 60. And we are taking strict profit at 35%, strict stop loss at 20%, and number of trades in this case is 100 for an example. And you don't pay attention to this because it's not leverage. And what I did here in advanced settings was, this is important, maximum position size per trade. So as your account grows from 500,000 to 10,000 to 20,000, right, the maximum amount you're putting in one trade, I have set it to $1,000. This is the basically no YOLO. So you're gonna, over time, you're gonna risk only $1,000. Let's say that your account grows from 500 to 25,000, over the course of 5 months, and you're only putting $1,000. So this is how you eliminate the cycle of, you going to 10,000, you're going back to 3, you're going to 10,000, you're going back to 1, and its cycle continues. This is how you avoid it. You start putting less and less percentage of your account. And once you're very, very comfortable with the strategy, you're making significant amount of money. And, after 100 successful trades, then you can move on to increase this to 2,000, 5,000, whatever you are comfortable with losing. And that doesn't mean you're going to lose. So in this example, your maximum stop over the course of time, is going to be maximum you're going to lose is 20% of $1,000, which is $200. So this is amazing, and now the other settings doesn't matter. They don't matter a lot. The only thing I did here was I put the additional order cost to $1. So that means that, on average, we are looking at $1 per trade. But we can increase this to 1.5, doesn't matter. Like, this is a rough estimate. And then what I do is I run this strategy, right? And look, this is how your equity curve should look like, it shouldn't be like wonky up one day and then next day down and then up, down. This is how you guys know technical analysis. This is how, this is a growth, and this is what we want to see on your equity account. And from $500 to $17,000 in 100 trades is amazing. Like, not a lot of people can do that. And here you can see the amount of fee you have paid. This is an estimate, can be 2,000, and the amount of money you lost, the amount you won, and then win rate is 70, loss is 30. And then you can see example trades here as well, and this is what, these are the fees and stuff. So, but this is an example of how it should look like. Now you can tweak this, according to yours. Let's say your win rate is not that good, it's only 60 in this case, but everything else remain the same, right? And you run this strategy, you still win. 2,000% profit, you still winning. So, and now if you keep the win rate to 50%, now let's see what happens. Let's run this strategy a couple of times. Even then you are winning. So half of the trades are wrong and still you're winning. And using the principles which I will teach you in this one, your win rate should be more than 70%. Theoretically should be more than 70%. And if you can achieve that, amazing. Now, again, so let's say that you want to take profit at 50%. It won't happen all the time, but let's say you're doing that and your stop loss is wider. Let's say it's 30% stop, but everything else is the same. And then you see your account is $25,000. So you can tweak this to based on so how would you identify this? By journaling. How would you know when to take profit, when not, like when to cut? These are fixed numbers. You don't even have to worry about the levels in this case. You can set and forget and continue, and if you're trading 0 DTEs, you might need a wider stop. If you're trading next week, you're fine with 20% stop. So over the course of time, you'll realize what's your average profit percent, what's your average stop loss, and you can tweak this to basically predict what your growth is going to look like. And funny thing is, if I change this to 5,000, and if I run this strategy again, look, if you're not capping yourself to maximum position size of $1,000, you are looking at 110K in 100 trades. That is insane. And you don't have to take 1,000% returns on every trade. 50% is amazing. This is what I was talking about earlier. So hope this concept is like coming together in your mind, and you're changing your mind and perspective towards, you know, what is a consistent profit means and what does trading mean. You know, you will not have 100% win rate. But let's say you are amazing, you know, at identifying amazing setups, and let's say that you're taking profits early. You say you're taking profits early, and you have a 20-20 ratio, but your win rate is high, right? And let's run this strategy again. Let me change this back to $1,000, and I run this again. You win $14,000. Perfect, right? So you identify this for yourself, that okay, I can identify setups very good, but I'm not good at taking profits. So you take profits at 20%, you cut it 20%, and there's no thinking involved in this. You know, you're as mechanical as possible, and as long as you stick to the same algorithm, you will win. All right. So let's move on to next thing, which a lot of people will have questions on, like, hey, so what strikes and expirations to use? So this is where, again, you know, if you go back to this, right, let's say you have a very tight stop, 20%. Now 0 DTEs can move a lot, especially as we approach after 1 p.m. So 20% stop is nothing, you know, it can go to 50% in an instant. So then what do? Then you need to know if it's a 0 DTE versus 1 DTE. And if it's you're buying next week, I will highly recommend to not buy 0 DTEs, but buy next week's. The premiums are a little bit more expensive, but you're safer. And then you can reduce your stop to 20%, because the premiums are not gonna move 20%. You know, you're not gonna get knifed down because theta is still your friend. And then you can adjust the profit accordingly. For 0 DTEs, for example, you can increase the profit from 20% to 40-50%, because they can go 50% easily. So this is where you need to adjust your mindset. For 0 DTEs, you need to have wider stop, but also you can take profit on a higher profit. For 1 DTE, reduce both of them. So this is how, again, it comes to how reactive you are, how fast you are, and this is your personality which comes in play here. And then strike selection is based on, for me, it's kind of based on two things. First, I look at whether the day is trending or choppy. If it's a choppy day, I try not to even trade it. An example of a choppy day is this. The market opened around 9:30 here, and you see this chop. It dumped, came back up, dump, came back up. This kind of day, you need to reduce your strike to in the money or one out of money, because you see how choppy it is. It's not good. And personally, I would just avoid trading this day. But if you are, that's where you adjust your strike price. But on a day like like this one, I will go out of money. I will go 2 or 3 strikes out of money, and I explain why later. But you're seeing the trend down, so you need to go here. And wherever your option chain is, just look at 423 put. Oh yeah, it's $2.8, for example. But I expect the move to be, my target is 415, because I know market is super bearish. So I'll get this one. So again, your profit and stop loss is dependent on strike you choose, because if you go way too out of money and your gamma is high and your delta is low, these can go to 30% down instantly, even if SPY moves like 0.5% down or up. So your strike needs to be, so I will suggest don't go way too out of money. Just stick to plus minus 3 points when you're starting out. And then you can explore as you progress, like how you like to trade them. It's a personal journey more than anything else. So strike selection part is, again, I told you, and then for SPX just multiplied by 10, so 10 points, 20 points, 30 points, you know. And then let's move on to some other things. So very briefly I'll talk about this because I'll cover this later in depth, is time frames. In this strategy we'll mostly stick to 5-minute time frame and then 10 minutes max, you know, on a slow day. So 5 and 10 are the ones which we'll see, and sometimes we'll go to 1-minute chart to kind of find some sniper entries, but that's advanced level. And then support, resistance, and key levels, I'll explain to you guys how I do it and stuff like that. And finally, supply demand also. I'll explain through examples in the end. But these are the concepts on YouTube. There's a lot of content on this. Many amazing FinTwit personalities have created a lot of content on this. So I will create my own later in this week. But for now, you know, like these are the things we'll use. These are basic stuff. And then next is indicators. For me, it's the Ripster EMA clouds. Sati has a great video for it. TTM squeeze, and then Sati ATR levels, which is from the Discord mod Sati, and we'll use these three in combination with 921 EMA and the levels and stuff. So this is the basic ingredient, you know, for the recipe here for success. And then now another thing I want to talk about is time is a level. This is very important. So 9:30 is market when opens on Eastern. So 11 a.m. this is on Eastern time. So 11 a.m. rule, 2 p.m. Eastern. You know, these are the key times when market can reverse in the direction against the direction of the trend, or you know, if the trend continues, then we'll know that you know what's going on. I'll give you an example here: 11 a.m. and 2 p.m. And then finally, last 30 minutes are important in the market because that's where we'll trade the SPX 0 DTEs. So I'll give you an example here for SPY 11 a.m. rule. Now, this is a great example. Market opens at 9:30, instant rip, and then around around 11 a.m. you see 10:45, 11 market starts to chop. You know, it's still creating a high, but then you know we are seeing chop here in the market. So the trend is to the upside, but this is consolidation right now. And notice how it comes to 34.50 here, creates a flag, and then this is where you get in, because you know that 11 a.m. rule. After that, in key pattern here, at least you know that if this target breaks, you can have a high of another high, and you see here another high. Another example here, this was on Thursday last, and you see here around 11:30, you know, it broke down, and the trend is to the downside here. All the EMAs are down. Trend is to the downside, and after 11 a.m. it created new low, and the trend continues here. Now, an example of how 11 a.m. rule can help you avoid not trading the day is because look at this day. This was 9:30 market open. It went here around 10 o'clock. Again, notice how when reversals happens every hour, 10 o'clock is also important, but 11 in my opinion is the very important level because foreign markets open around that time and close some of them. So you see around 11 a.m. here, you know, we see rejection here. So it never really created a new high, you know, it's on a closing basis, and it kept trying, but it didn't. So you know that, you know, chances are of market, and look how choppy it is as well. Chances of market doing that later in the day is low, you know, and that's how you keep these time zones in mind. Now, another thing is 2 p.m., right? So, you know, I think what I've noticed is that around 1 to 2, you know, market is like in a dull zone, actually 11 to 1. And after that, you around 2 p.m., 1:30 to 2, you start seeing patterns to break out. So here again, using the 11 a.m. rule, you know that there's not much high. We're not gonna create high. Sorry, and then you see this kind of pattern emerging here, right? And then notice the time here at 2 o'clock. You know, here you can see 2 o'clock here, right? So around 2 o'clock, it dumped. So you can use these time as levels to kind of position yourself that, okay, I'm building a context or a theory here of a trade plan that, okay, if it doesn't break above this and if it breaks below this consolidation zone, right here, if it breaks below this area and once it goes below the 921 EMA, I'm gonna trade it. I'm gonna short this, right here. I'm gonna short it, and look how beautiful this short was. This would have been more than 100-200%, and your stop could be very well be right around this level, right around this EMA. So this is how your 20% stop and 30% gains can happen. So this is how you look for opportunities in the market that, okay, these are the key times I need to be aware of. So 11 a.m., 2 p.m., all these are important time. Reversals happen all the time as well. Another example I'll give you here for reversal around 1. So let's go back a couple days. Right here is a great example. So of here, right here, you see here that the market is kind of in a chop here, and right around 11, 12, around this area, the market is consolidating and then it reverses hard. Actually, the more the consolidation, the better the reversals are. Trying to find an even better example here, which will even give you a better idea of what I'm talking about. If not, then it's okay. I'll try to find later. We'll have more ideas like that anyway. Yeah. So apart from this, now we have talked about time is a level. Now let's talk about the setups. The first one, very easy to identify. One of the easiest setups, I would say, is 921, pull back to the 921 of the price, and then crossovers as well. So kind of similar on 5 and 10 minute chart. So let's look at some examples here. So let's go back to our last couple of days here. I have marked some examples for you guys. So yeah, let's see. Here, right here, so you see this blue one is the 21 EMA, and then this red one is, this red here is the 9 EMA. And notice how the 9 EMA crosses the 21 here, and you don't even have to enter here. You don't have to anticipate the entry right here. What you can do is wait for it to retest this 9. So it retesting here using 11 a.m. rule, which I just told you, and this was a consolidation as well, and then very clean break all the way here. Let's say you missed this trade, you missed this one. Another opportunity, we have a pattern here, rejection on 9. Let's say you missed this one as well, and now you just woke up and you see look at how when the reversal was at 1, around 1 o'clock, and it get rejected here at the 21 EMA. So you're not fighting the trend. The trend, there was a retest of this EMA, and then you add a short position here. You buy puts here, and look again, nice trade here. You could have kept your stop loss at 20% here, never came back around this area, price never retraced back above this. So you could have kept all the way until here. Then again, so many opportunities in the market using this strategy. And the next one I'm going to talk about will give you even more examples. Let's look at some more examples here. Right here, this one. So trend is to the upside, and then it pulls back here. Now notice how this is consolidating. So you can't really enter a trade just based on this, it crossed down, because you're still kind of at the higher level, and you see that trend is to the, always follow the trend, never go against it until the trend changes. And in this case, the trend is to the upside. So now, it's consolidating here, and then now look, as soon as this green one crossed over this, you see this green here, this green one, the short EMA crosses over this blue one, which is 21 EMA, and it's consolidating here, and boom, boom. So, and then break off a pattern as well, which I'll talk about. So this is how you're building your conviction, and that's how trading identifying these setups works. So very simple strategy, nothing to worry about on this one. Next is patterns and then breakout. So when do these work? These work after consolidation phases in the market. So after 11, you'll see consolidation. Usually 1 to 2 is the time where you have consolidation. So that's where I start looking, well, where can it break down and break out? So this again, we have a flag here on a uptrend, and the break of the flag here right on this level here, right around this. You see how price is consolidating here, and then boom, you could enter right here at this break, and then you can keep a stop of this right here. So good risk reward, and that's how you and what time, around 3 o'clock. So key times 2, 3, but 2 o'clock and 1 o'clock and 11 are the important ones. Yeah. So follow the trend, see where is the opportunity, key breakout. Another example here, I'll give you many examples. This another one, consolidation phase here, right here. So you don't have to pay attention to a lot of things except SPY and QQQ, and you can trade that way. You see here, this another range here, and then it breaks below this range. And again, there's no trend in the market, so everything is equal. It can go up or down. So down, it broke below, you enter. Another one here, this is in range here, so right here, this one, and then another one right here. Patterns are emerging in the market. You see rejection of 9 and then pennant breakout. See another one here, right here. This is a range and break of the range. Follow the trend, respect the EMAs, try to get as close to the EMAs as possible, and either call or put, doesn't matter. And if the patterns are emerging, that's great. And usually patterns break out now. Hey Drippy, when do patterns break out? Time is a level. Around 1 o'clock, around 11, around 3. So just pay attention to the closing bells, and like every hour. Those are the important ones. So yep. And then next we'll go to now supply demand is also important, but not as important as the key levels which I told you. Now supply demand do play a role, and especially when you see sharp reversals and when market opens, let's say next day, you're looking at, hey, where can market reverse, or where can market find, when market is extended on a higher time frame, that SPY is oversold, overbought, we'll see reversal on supply demand zones, and that's why they're important. So let's look at some examples of them. So let's go to 1 hour chart for SPY, and I'll explain in depth on how to draw them, but look how this area is important for SPY. Price is deciding where to go. This area, right? This area right here, this area right here, this area. So this is an important supply demand it was, but then it converted to supply now. So this is the area to watch for Monday. This is where I'll be looking to short, between 436 to 438 if market reverses. And if you go to higher time frames, 4 hour chart. Now 4 hours, you see here, this is another demand because price is bouncing from here. It's finding support. There's disagreement between buyers and sellers, and it's showing here, and these are the levels to mark. And another one is right here. Price is bouncing around this area, this whole zone actually. So does that mean price will immediately reverse in that zone? No. Because look at this example of resistance. Key area here, couple times got rejected, but then it broke above and failed and went down. So it doesn't have to be perfect. If the trend is strong, it can break through it, but then if it fails from that area, then you buy puts. So it's not like perfect like key levels, but it's an area to be aware that, okay, reversals might happen. So you start seeing consolidation in that area on higher time frames. So that's how you identify supply demands, and I'll go over some other examples in the future, but those are the levels to look for on a higher time frame where can reversals happen. And finally, I want to talk about SPX0 DTE. This is something which I have started trading recently. So these are still developing concepts. And why I like it, because risk reward is insane. I'm putting $25 per contract, to get $500. So this is insane risk reward. The key is to not oversize on this, because if you get 10 contracts, it goes against you, you're going to lose all that money instantly. So key is to not oversize, make money slowly on this. Again, like from $25 I converted to $500 the other day. Using that $500 I can trade 20 times more. I can take 20 trades, and chances are, using my strategy, one of like at least 50% of them are profitable. We convert those $25 to $500. So that's exponential growth. So when will we take them? When the opportunities is good, when your account grows at least from $500 to, let's say, $1,500 or $1,000. This is up to you now, like how much you're willing to risk on these. Everyone is different, so you figure out to take them or not. And we'll go in depth on this strategy as well. Finally, I want to talk about, consistency. Journal your trades, have a consistency checklist. I have it already. I shared on Twitter. If you ask me, I can share on Discord again. And, if let's say things are not working after 10 trades, 15 trades, you're still struggling, right? Stop and reassess. Go look at your journal and log. See where things are missing out, what's going on, like analyze yourself, like be able to self-criticize. And then everything is mental game. If you're weak outside the market, things are going bad at home, you have fights with your spouse, or your dog is sick, that's going to affect your trading. So stop. You don't have to trade every day. Take 1 to 3 trades a day. Just come at key levels in the market. Let's say you miss the open, great, no problem, just come around 1 o'clock. You don't have to sit in front of the charts whole day. And this is what we are trading for, to have freedom for doing things in life. But if you're sitting in front of the screen for 8 hours, you don't have that freedom. So we're gonna disassociate ourselves from that concept. And this is a struggle for me as well. Like, I'm spending 9 to 10 hours in front of the computer, and what's the point? What's the point of earning all this money if I can't enjoy my life? So your mental game needs to be strong, and FOMO needs to be curbed to extreme level. Like, you will see people make 1,000% on one day, but realize that those people will lose too. So if you are one of those people who are looking for 1,000% returns on every trade, this is going to help you, consistently grow. Now, saying all that, you don't have to not trade anything else. For example, you can have a separate account for this, but you can still trade other things like swing trading or other opportunities in the market, earnings, lottos and stuff like that on your separate account. Like, I'm not saying don't do those things, but at least for this strategy, for you to try it out, you need to be able to just stick to the rules for this. And I get a lot of questions on the brokers. So for 0 DTEs, Fidelity, Interactive Broker, TD Ameritrade, all of them have active trader setup. They allow you to trade SPX, SPY, QQQ after 2 p.m. So ideally, those 3 should be your target for setting up active trader. And we'll go over in depth later on how to do that for each of them. I need some help from the community on this. So if you are using any of these platforms and you have an active trader setup, please reach out to me or mods, and I'll try to accommodate in the video. And finally, the fee is always like 65 cents per contract, and you can get it reduced on different platforms based on how many contracts you're trading. But I'm guessing that if you have a small account, you won't be trading the size which they expect you to reduce the fee. So I use Fidelity. I'll be using that. And over the course, now the plan for this week is for you to digest these concepts. You don't have to start trading right away. You can wait for next week, understand the concepts first, learn from the screen reading, which I'll share, and then use that later. You can do a paper trading account in Think or Swim, follow along with me, and many things you can do, but you need to make a decision and stick to it. And so that's all, folks. This is the overview. And then in next video, like, we'll go over in depth on how to journal, what to look for SPX 0 DTE supply demands, how to draw them, how to identify breakout trades, and then again, how to identify EMA supports and stuff like that. 11 a.m. rule, I'm gonna go over the scanner, which one of the community members been working on, and how to use that for your advantage. And then we're gonna go over these. This is already a lot of videos, amazing videos online, so we can skip this one. And then TA, I'll go over how I draw key levels, and then this I already covered. So yeah, this is it, folks. And remember the rules. And I wish you all the best. My goal, as I said when I started this, is for you to create life-changing wealth, and that happens from this week. All right, folks, have a good one.